All right, good day, people. It's Maritime First Academy. So our vision and aim is to make forex trading as simple as it can be. All right. So today we're going to be talking about liquidity and how to spot and identify liquidity on your trading chart, be it currency pair, stocks, crypto, or whatever chart whatever thing is on the chart, how you can spot liquidity on it. Okay, but basically, let me just say this one aside. In currency pair, that is for the major currency pair like those Euro, USD, and whatever, liquidity is a different ball game altogether. I'm not saying I'm about to say doesn't still apply for it, but there's a different ballgame liquidity. We have to account for the previous day highs and previous daily lows. We have to account for the various sessions. We have the Asian, we have the London and the New York sessions. So those we have to account for their highs and the lows. Okay. So, but that will be taught in one of our videos. Okay. No problem. So now, but in today's video, we're going to be talking about the two major ways you can quickly identify liquidity on any chart. Okay, on any chart. So basically, we have the first way to identify liquidity is support and resistance zones, and the second is what? Trend line liquidity. Trend line liquidity. Okay. But today on this video, we're going to be focusing on support and resistance zones. As you can see on the video on your screen right now, on the video, you are seeing the clear identification of liquidity. This is just an image I just quickly drew to show you how liquidity plays out. Okay, so yes, let me just quickly draw it out well for you. Yeah, exactly. So yeah, this is it. When market gets to a particular point in the market, like when you can see when market got to the high side, the first arrow by your left, you can see when market got to that point, there were more sellers that pushed the market lower, and when market got to the lower point, there were more buyers that pushed the market higher. When market go back to that same point, there were more sellers that pushed the market lower again. When market bounced back again to that particular zone, there were more buyers. So it's just a bounce off of zones, and this is what we call support and resistance. There'll be more sellers, more buyers at a particular point. It just keeps on bouncing off and off of a particular zone. This is what we call support and resistance. To the high side, when market gets to the high side, we call them resistance, because market is pushing the market price. Market is pushing down. Why? When it gets to the low side, we call it support, because market is supporting it. Market is pushing it back up. So this is what we call support and resistance zones. This is the first way to understand, to see that liquidity is building up. If you look up above all these drawings or whatever, you can see spotted out there the market was creating liquidity, because the market is moving sideways, and we know that the sideways market is also called consolidation. A market is just building liquidity. When market is moving sideways, it's just building momentum to push either upwards or downwards. Okay, all right. Now, if that aside, let's go to the video proper for today. Let me delete all this stuff. All right, let me delete all this stuff. Oh boy. I'll be quick about that. Sorry. And we are done. So this is a clear example of a support and resistance zone. Remember, I said that when market is building liquidity, it wants to push either to the downside or to the upside. So if you can see, see this thing carefully, you can see that this place is support and resistance zone. All right, so market got to the high side of this in the box. Market got to the high side and market pushed lower. When market got to that same point again, market would push lower. We call it, that zone was a resistance zone. So market was pushing lower when it got to that point. So yeah, when market got to the downside here, market pushed higher. When market came to this zone again, market broke and started pushing lower and lower. So that is the aim of a liquidity. Once the market is building liquidity, it does know that the market wants to push higher or lower. But in this instance here, we saw that market pushed lower. All right, this is just one example to spot liquidity. So once you see market doing all this moving like this, also the market is building liquidity. If we can spot another zone, let's see whether we can spot another zone. Yeah, you can see this whole box here. This whole zone here is one huge pile of liquidity. It's one huge pile of liquidity. It's a huge pile of liquidity. Yes, market kept up bouncing off, bouncing. You just kept moving sideways till eventually it pushed down. So that's how the liquidity game works. It's just a whole huge pile of liquidity. So if we understand how support and resistance zones, how they play out, if we understand how they play out in the forex market, we'll be very, very profitable. We need to spot liquidity as quickly as we can in the market. This is one zone. This is another zone. When market came to this downside, the supports, right? Market push. When market came to the upside, to the resistance side, market push. Market came to the resistance side again. It pushed down. Market came again to the resistance. It pushed. Market came to the support. It pushed up. So we need to understand. We could say that there was now a force. What's the word for it? A fake out. A false break. We would explain. If you don't know what a false break is, we'll explain what that is in our next videos. All right. So a market came. You see, the market came again, pushed into the support zone and pushed again. The market kept on repeating the same thing till eventually there was a push. Eventually, that took out all the liquidity that was lying on this zone, on the support zone. The liquidity was lying on the support zones. Liquidity rests in zones that have been tested over and over again. Zones that have been tested over and over again. Liquidity rests on those zones. Okay. When you see a particular point in the market has been tested over and over again, more than 2 times, market, just know that there's liquidity on that zone. Okay, that's what the support and resistance zone help you to identify. They have to identify the liquidity that is resting on that zone. Okay, so it's quite easy. Once you spot liquidity, just know that there's going to be a push. There's going to be a push to the downside, to the upside, because the market must always get that in play. Market must always take out the liquidity that is close by. Market must always take it out that is close by. Be to the up, be to the downside, be to the resistance, be to the support zone. Market must always take it out. So that's what you need to always get. You need to always identify. That's why we need to always identify support and resistance zones. It's not our trading model. We don't use them to trade. We use them to identify liquidity. And once you have gotten the hang of liquidity, you'll be a much more better trader. Okay. All right. That's basically all. If you keep on going, you can see another form of liquidity again here. You see, this is liquidity. This is liquidity. The box is liquidity. Sorry, let me just get it out well for you guys. Yeah, this whole box is liquidity. You see the market came to, when the market rose to the resistance side, it pushed down. When the market came again to the lower side, it pushed, came back to the lower side, it pushed. It was just off that zone. Just when the market finally took the liquidity of the support and went on to sell. So basically, yeah. Basically, that's it. You can see this is another clear example of a zone with liquidity. All right, let's draw it out again. So liquidity, you just need to. It's that easy. Just once you see a market moving sideways, just try to as much as you can, try to just mark out a place that has more touches, that have repeated touches. As you can see, to the upside, we see market going. When market goes to the resistance zone, which we call, if you want to call it upside, no problem. When market bought, when it got there, it kept selling. That was the resistance push down. When market got to the downside or support, market pushed up again. When market When market got again to that downside, it pushed. When market got to the upside, so it's quite easy. And you can see finally we can see, because recently we have been having a sell take of liquidity. Now we can see that we had a what buy take on liquidity. Market took the liquidity and kept and bought. Okay, know that when liquidity, I've told you, when you see liquidity, it doesn't mean the market wants to push. The market wants to push. Okay, market wants to push. So it's just quick. It's that easy. Identifying liquidity with support and resistance zone. If you look carefully, you can see that liquidity is all around here, all around. There are many zones. All right, I think that will be all.